Well, good day all. Ira Epstein with your Spider ETF video, and this video is for Tuesday, the 28th of June, 2022. And we're sitting here now, where are we? Getting on 6 o'clock p.m. Central Time. So here we are in summer. I'm in my shorts, having a good time as I'm talking to you, by the way. We're getting ready for the 4th of July. My wife's planning all her parties. And I promise you, traders around the country, they're getting ready to hop in their cars, visit family, do other things, and wrap up their trading over the next 72 hours. Are they going to take a lot of exposure over the 4th of July? In the futures, most certainly not. And I don't think they're going to do that much in the stock markets either. We have had, past tense, a nice bounce in the market. But it's a bounce. It is not a trend change, and that is the hardest thing. Every time we get a bounce, the TV announcers are bringing on the analysts. Do you think we've seen the lows? Are you starting to pick up things? And inevitably the answer, I'm defensive here, but there are some good things that you can pick up, blah, blah, blah. Well, there's always something to pick up. You get a 50, 70% drop in a stock. If the company's good, there's always something good to own if they're paying a dividend and the volatility comes out of that particular one. I get it. I've been around this. See, I understand the game. But as a trader, the question is, what do you want to do? And most of us want to be traders. I mean, that's what ETFs are all about. They're not investments. They're trading vehicles. Google's an investment. Apple's an investment. You're buying the company. But when you're going to these mishmash ETFs, and there's something for everybody in them, it's a trading vehicle. When I look at Chewy, I said this yesterday, I'm going to stay with it. You're back into the resistance. This is a resistance zone. Learn to read the chart. So up here, where are you going? You think you're going right through the moon? Why? What changed in their business model? If anything, people with inflation are backing off. They might change brands, buy something cheaper. Doesn't mean they're not going to use Chewy, but be careful. You get up to these values and you got to be careful here. You've had a nice trend that came in from just over $26, went up to $40, nothing grows to the sky. Probably time to cash in. Why? Well, you got one crossover. I think you'd agree with me. If you take a look at the market right here, watch the 18-day average gets over the 50. Market continues, and now where's it struggling? Right here. Where the heck is my good friend, the Bollinger Band? Oh. So the market spent 4 days in a row over the band, right into the 100-day average of closes, and all of a sudden today, we get a 7% drop. Logical. You're into the resistance zone, you're into these numbers. This is where the smart money is saying, okay, it's July 4th, I made my money. I think I'll step away for a bit. It's not bearish. You could get a drop here, but getting through this is not going to be easy. If you do, you got to be talking going back to the 50 level. Do you think after this rally from 25, you're ready to double the value of the stock? You might think so. I don't. I then look at momentum. And what the heck is going on here? So we had a market, and this is always so important to study. Both numbers were not over 80. Day one, where they're both over 80. Day two was yesterday. If both are over 80 today, you embed. You convert the market from being overbought to embedding. You typically don't embed. Do you see this? Go back and study. You will see what I'm saying. You find ways to turn back from it. That's the typical part. It's exactly what the market did. So I am not a top picker. I am not bearish. I do think that that's where the money should come out of the market if you've been watching it. AMC, just yesterday, what did we talk about? We said that if this market's going to go anywhere, it's going to have resistance if it gets back up to the Bollinger Band. If it can get through it, then the 100-day average. I mentioned that if it's going to be good, it's got to go now. You're not going to make this market good in September. The kids are going back to school come the end of August. You've got your window right now. I know the movie theater business. I owned one, operated one in the sense I was the money guy behind it, worked with it. It is a terrible business. It depends on the concessions. It's that simple. And if you don't sell enough of the concessions, which we all know will break the family to begin with. I mean, you can't go to a movie today with two kids for under $100. In big cities, you got to pay to park, but not everywhere. I realize the suburbs are different. You can't get away from the price of the kids wanting that kids special, the 2 tickets, everything you're doing, you and your wife or other partner, whoever it might be. Oh my God, it's $100 before you know what's going on. And God forbid you have a babysitter at home. It gets even worse. So I just pay attention to all that and I say to myself, okay, what might this market do? And it's at a resistance zone. Now, it is in an uptrend. I teach, if you learn how to work with the Bollinger Bands. At the end of this, I'll have a video on that. Learn to work with this. This is a real important formation. Is it a base? At this point, I think that's how you have to look at it. The market is trying to base out here to give you a bit more of a rally, but betting that you'll stay over a Bollinger Band, sucker move. Why? Only 5% of the time does it happen. So if you were fortunate to catch that move up to it, because you hadn't been back there since the end of May, I think the pros took their money off the table. And now they'll say, okay, if it's going to poke through, and that's a base, then it's a lockup for $16. Let's see what happens. Let's get to the next chart. Apple. You've come all the way from 127 for all purposes to 144 roughly, 143 and a half. And typically where you go is when you correct an oversold condition, you go back to the closest main moving average. In this case, it's clearly the 18-day average in red, and the market likes to play there to figure out what to do next. Now, Apple has a lot of good behind it. What do I mean by that? Apple's coming out with its new products. The market's not going to wait down here again to buy the products. This market's already seeing in the news almost every day. I know in the papers I'm reading, and be it what I get from Bloomberg, their tech section, or I get from my different, not consumer reports, but I get technical papers. I'm looking at it, and it's Apple, Apple, Apple. So it's getting the press, and that drove the market up. It doesn't mean it's ready to go much higher. It means it ran into its objective, and now the market's going to sit. I think you have to take a fresh look after the 4th of July. I don't think you get a little crazy with it right here. Disney. So they took the man that has broke the value of the company, and they gave him a new 3-year contract today. I don't get it, but that's what they did. How did the market greet it? The market is down nearly a percentage point today. People see what I do. But more important, there's something way more important at work here. I'm going to, again, take this back with you. I want to teach. So here we have an embedded reading. Embedded means your blue and your red are going sideways under 20 for several days or more. If the market gets the red line to close over 21, you're no longer embedded. And when that occurs, the market normally makes a run for the 18-day average of closes. Learn this. I will teach it to you in the course. You will be using it on stocks, spiders, ETFs, futures. If you can chart it, learn how to work with this. It's very important. It's the combination of Bollinger Bands and the way I teach slow stochastics. And it will change a lot of things you look at. What did we do here? You tell me that you weren't embedded. I just want to make my point and get to it for you right through here. Here we go. Just take a look. If you lose the embedded reading over 21, I think you're going to go to the 18-day average of closes. Okay. You may say, come on. Okay. Yeah. So I'm not going to do this on every chart, but that's worth a lot of money. Does it work all the time? Nothing works all the time. Does it work a real lot of the time? You tell me. I know what it does. You tell me when you take it and your eyes open up and you start seeing these things develop over and over. You lose the embedded reading and you're going right back to the 18-day average. People don't know what you're talking about. You get an edge on them to a degree. XLI. You had an embedded reading. You lost it. You tell me the number you went up to and failed against. XSD, not an embedded reading. I don't believe it did that. It was oversold and it's getting a bounce. Doesn't have to go to the 18-day average. Different play. That's not the embedded reading play. XHB, the home stocks. Well, you corrected and you made your run to the 18-day average zone. That is so typical. It's different with the enhanced Bollinger Band. It's a higher percentage play as to where you're going. Are you going to lose in the energy sector the embedded reading? Not yet. Close, but not there. You got to be over 21. So the pros are looking real hard at this. Now, what did I tell you? And if you're a subscriber of mine in the morning, you know what I said. What I said was so simple. Folks, when you go slicing through the combination of a Bollinger Band and a 100-day average, it's not uncommon that you look at the next level, and it might be wherever, if there's another moving average, in this case the 200, the next support. Second leg of the idea. When you do that on rallies back up, what should have been support and was support and gave way becomes resistance on the way back up. And that's exactly what you have right there. That's your resistance point. If you lose the embedded reading, if you lose it, you'll do it by being over also the 100-day average, which opens the door for the 200. I'm sorry, for the 18-day, not the 2, for the 18-day. So we'll see if that, in fact, is what this market wants to do. GLD, you're oversold enough where I think the pro money's going to say, I'm going to leave some scraps on the table. I don't know that I want to be in this on July 4th when the U.S. markets are, for all purposes, no volume and close. They do open. Remember that. Sunday night, you open with the markets. They have an abbreviated session until Monday morning. They close early Monday. Then they'll reopen on Monday evening again for the Tuesday trade. So be ready for that. I sent out to my subscribers and all my clients the schedule today. In GDX, the market coming down, same thing. Bearish, but oversold. Not that interested in selling oversold. Copper can't hold a rally. This does not look to me like the COVID policy in China has made a material change. Now, they are saying in China that they're noticing borrowing and lending going on in a big rate as the government's trying to get infrastructure programs going. When I hear that, immediately I go to the copper market, and I'm not seeing it. I have to lose the embedded reading to get friendly copper. Until then, I think the pros are selling the rallies, and they'll make haste with it. If the market breaks again, 29.54. If it loses the embedded reading, back to the 18-day average. This market had an embedded reading. It lost it right here. Tell me what it went up to and failed at. This is the beauty of what I put together. It's probably the best course I've ever done. And if I had to do one thing and just trade one pattern the rest of my life, you're looking at the pattern. Got it? Pretty strong statement. Lower highs, lower lows, but oversold, falling back to the 18-day average and just trying to hang in there. And in FXE, as I told you, you got oversold under the Bollinger Band. You're only going to stay there 5% of the time. Why are you hanging around? Up, 18-day average is often what you go to get rid of an oversold or overbought condition. Oversold, rally, overbought, break back to it, and the market spends a little time there and tries to figure out what next. Traders like to have a neutral area on a chart to work with. Remember that. Moving averages offer you that. The Bollinger Band course gives you an edge. Take a look at this and learn. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.